Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Linn Associates with your morning flash update for a very wild Tuesday. This is the 6th of February, 2018, about 9:20 a.m. Central Standard Time. Obviously, for those of us that keep up with the stock indices, when I went to bed last night, the market was down almost 700 points in the Dow. Ended up going down to 23,088. It reversed course, just went back up to 24,640. I don't know if on this rally it made that high or if it got there earlier, but it has certainly come off the low. And just look at the range. You're almost at a 1,550-point range. That's got to be a record. Then when we take a look at the S&P, this puts it into perspective. Here, too, you have a range of 150 points from low to high. NASDAQ is looking at a range right now of 330 points. So what's going on, it's the continuation of what you saw. World markets also saw the same event. Now, percentages. From the highs that we made just recently, the most recent highs we just made, to these trough lows. About a 13% drop in the Dow, about a 12% drop in the S&P. So the continuation last night took the markets beyond that 6 to 8% level that they were knocking on the door of, took them out further, and now the markets are backing the other way. They're trying to, if you will, get some legs under them. You can see that the market's not buying into that this market's going to continue crashing because the gold market is down. That is one of the safety valves. The Japanese yen up 29 points, but almost 80 points off the high, so traders are backing out of that. Traders are also now, while they had bid up dramatically, and that's the right word, you went from 145.17, 2 full points in the bonds, and you're giving that up. So the panic as the market was dropping in stocks, we're seeing strong bids come into the bonds and the notes. That's giving ground. And more important, is the market's feeling good about itself that maybe this is past and that we're getting to a point where the correction has run a course. You're starting to see bids come into the grain market. The sugar's got a bid. Crude is 80 points off the lows roughly. So I'm looking at what's going on. Another important number, the VIX. VIX is lower. It got up to 50.3, 2251. So it's bouncing away, but this is important. The panic isn't there. I will tell you where, if I were in the markets, you got to be watching what Bitcoin is doing. Yes, it got under 6,000 today, and it's come back up from there, but it did get under the 6,000 level. People that had bought that market up at the 20,000 level in December and January, early January, now they are 2/3 of their investment gone if they held on to it. How much lower? Don't know, don't care. It's just another trading vehicle. But it's quite a day as we look at the market. Now, as we take a look at events, the trade deficit, $53 billion, a bigger trade deficit than the market was looking for. The last deficit was revised down a fraction to 50.4 from 50.5. Exports were up 203.4 billion. The export percentage up 1.8%, prior up 2.3%. The imports obviously larger than that, and that's not necessarily a bad thing. You know, it's the way that we're doing business. German industrial orders for December showed an increase of 3.8%, well ahead of the expectations of a 7/10. That's bullish for that for the Eurozone and their currency. And here's something else. Germany's powerful IG Metal Union Group reached a pay deal for 4.3% increase from April. In between now and April, each member gets about $125 or so. But that is, again, a sign that tight labor markets in Europe, They're paying up. That'll lead to wage inflation. As expected, and by just about everybody that I read their analysis, the Bank of Australia kept key interest rates unchanged at 1.5%. So what we're all going to deal with right now is, what does this all mean for our markets in terms of let me come back to this, in terms of what it means for price. Here's what it is. You've got to buckle in, buckaroo, because it's going to be all over the board. This is what you call the volatility trade. For position traders, might be a good area not to do anything. Let the market work this out of its system. It's the first correction after a completely straight up move. As I pointed to many of you last night, it's the first time we've hit the 18-day moving average of closes in a number of the different stock indices. The market's taking on a different character. It's left that straight up rally. And when you see that, you try to take advantage of it in different ways. And we do that with you. Our clientele got buried. Last night I buried them in charts, giving them an idea as to price counts in the Dow and the S&P as an example. As these other markets are trading, what was the impact of all this on them? And we wrote about it. Our staffs were going late last night. You got an awful lot of data on it. I know I'm going to be on BNN TV in Canada in about an hour as they want to talk the impacts on these, and they know that we write about them for our clientele. We show them what we do, and they want to find out what that all means. How do you see what our clients see if you're not a client? Well, you get a trial. You can't get the information without working with us. Give us a call, go to our website. You can pick the different categories you want, and I'm telling you, you'll see a lot of information written for commodity traders. We're not writing for a stock trader, we're not writing for the ETF, we're not writing for the derivative trader. We're writing for the stock trader. So how do you get it? Go to our website, you'll see a carousel of free offers, choose from there. Click up here if you're watching us on YouTube. That'll take you right to the forums. Underneath us on many websites says click here for Ira's free information. I'm Ira Epstein. Thanks for watching, and I'll see you this afternoon, and God knows where we'll be at that time. Good luck, good trading to you.